Hey guys, so this is going to be an important update here on the SP 500. For those of you guys that have been watching our daily YouTubes here for the past few weeks, you've noticed we've talked about a very specific pattern, a specific confluence of things taking place here in the equity market. I want to give you guys an update, kind of where we stand and where we might be able to see things going forward. So quick flip of the camera gets us to the SP 500. So what this is here is very simply is the SP 500 on a weekly basis. And again, if you rewind and go look at some of our other videos from the past couple of weeks or so, you've seen me point to this pattern here several times. This is our what we called a megaphone pattern. Sounds a bit silly, I know, but if you take this into consideration with all the other things that we had take place, from geopolitical news to economic data and more, it was quite significant that we reached the upper end of this channel. And right now, so far, on the weekly chart, we're now about 6% or so off the highs. Now, it's important to know that things always will correct quicker to the downside than they take to go up. So, for example, if you look at the S&P, where the S&P closed, this is now the SPX, when it started that rally on June 6th, it took about 35 days for it to go up. It took about 5 days for it to go back down. So it took 7 times longer to go up than it took to go down. I ultimately think there is more room to the downside. I think 2750 to 2800, that's about this area here, which roughly coincides with the late May / early June lows, is possible. Right now, I would think that stocks are actually oversold. Again, that's a bit of a risky call to make because of the sort of the severity of the momentum. But for example, what one trade that we had for clients was this one here. So we told people, clients 1 week ago, excuse me, on the October 300 strike put for purchase on July 29th for $6.25. It's now closer to almost $2. That's a 320% return. So I think that's good enough to take a profit for sure. That's not to say stocks can't go lower, but it is to say that right now this is probably as good a spot as any to take profits. Also, options are getting more expensive, and so the VIX, for example, traded almost near 25 yesterday. So at this point, one would have made money even just from the volatility going higher. So long story short, if you, and I'll go back to the chart in a second, I want to show you one more thing. This is not the environment that people think it is. I don't think we're in a situation where we could see a crazy amount of more upside. I've given you the pros and the cons and all the different angles on this situation over the past few weeks here on our public videos. And so I'll leave you with this chart for a little bit of perspective, just going back to the S&P and kind of highlighting this whole notion that we haven't really done anything since January 2018. And it just goes, the latest reaction here just continues to kind of be, give us the same thing. So if you look at where we were in early 2018, in terms of the S&P, we were right here, which is more or less where we were traded at some point intraday yesterday. So yes, we've had big gyrations, no doubt, and there's been a lot of trades. But if you're hoping of a major new move to the upside, I don't think we're there at this point just yet. Lastly, it is important to note that stock buybacks have been one of the major sources of contributors to the stock rally over the past 10 years. And think about this and take some time to kind of let this sink in. When corporate earnings start to get squeezed, and inevitably they will be now, corporate buybacks are going to stop or slow down. If they've been the major contributor to stock market gains over the past decade, what does that mean for the broader stock market? Food for thought. I'll talk to you soon.